consensus generally is that rising yields is a big issue, but 1.6 is historically low. How big of an impact are rising yields? How big of an impact is real inflation having on the markets? And how does a perceived lack of clarity from the Fed impact all this?
Yeah, Frank, I mean, look, these are really key issues for markets at the moment. I think we're across the board expecting a rise in inflation over, the next couple of years. Now, to our minds, this isn't too much of a concern in a way, because it's likely to be, temporary inflation, which is just driven by supply side stuff that the Fed typically looks through. And then you have inflation fading out to around 2%. The problem is, in the meantime, as you're seeing inflation rise, we're also seeing bond yields rise. And for the Fed, that might be a concern if it results in tightening financial conditions. To us, at the moment, financial conditions are still really easy. Even if you look at real yields, they're in negative territory still. So this is a good environment at the moment. But of course, these are potential challenges along the way that I think all investors really need to be cognizant of.
Yeah, speaking of challenges, let's talk about the vaccine rollout globally in the EU. We just earlier in our hour, we talked about a number of countries having some issues with at least one vaccine. In the U.S., things are going well, but not quite the same story around the world. How does the vaccine rollout impact the global markets and especially emerging markets?
Yeah, as you said, we're seeing vaccine rollout. It's pretty good in some places like the US, like the UK, like Chile. And then you've got slightly differing experiences. If you look at Europe, they've had a really slow start to the rollout and still haven't managed to catch up. So they're far behind where we would have expected them to be at this stage. And certainly for emerging markets, you've got a lot of places who are only just receiving their vaccines. So actually for them, vaccine rollout could even extend really well into 2022. So from a global market perspective, what this means is, we're seeing so many governments really concerned about mutations. And we're starting to see discussions from governments about introducing border controls to countries which are a little bit behind with their vaccine rollout. So for countries who are really dependent, for example, on tourism, this means that they're going to still be held back even through this global growth recovery. So it's one of those areas where you're going to see a desynchronization of global growth, I think, as this year goes on.
So looking ahead to the FOMC meeting, are you expecting to get that clarity that a lot of investors are looking for? And is 2% still the right target?
I think it's still a big question. I don't think it's going to be answered this week. I think it's something that the market is going to be grappling with for the remainder of this year. What is it that the Fed considers to be overshooting? How long does it need to be above that 2% target? These are questions that I think, as the months go on, the Fed will have to come to a point where they answer it. I just don't expect it to be this Wednesday.
Seema, we have to almost wrap this up. One more quick question. How do you see the markets responding for the rest of Q2 as we see a solid vaccine rollout here in the U.S., but as you mentioned, an uneven one globally?
Yeah, I think, look, the upward path, as you said, it's a strong growth environment at the moment. So really, that should be positive for risk assets, for equities. But of course, as you said, the rising bond yields, it does create some volatility. So it might be a bit of a jagged move upwards.
Shepard Smith here. Thanks for watching CNBC on YouTube.